Hello everyone, I'm Mark Sain and welcome to Sain Investment Solutions. Please take a moment to pause this video and review the following disclaimer. Thank you for that. Welcome to week 50 of the Forex market review. Please take a moment and just review the www.saininvestmentsolutions.com website, as we have a lot of free training videos there available for you. And if you wish to have some additional videos which aren't available on that website, you can just register your email address and we'll be more than happy to get the support team to send you through some additional videos. And those videos are only for the clients which register. So please register and then we'll keep you up to date with every change which occurs at www.saininvestmentsolutions.com. Well, I want to wish everybody an early Christmas and New Year. Hopefully I get the opportunity next week to give you that wishes again, but I just want to give everyone a successful hello out there, and hopefully your trading went very well this year and that it goes even better in 2016. So as normal, we're going to take this opportunity to review the Daily FX website, have a look at some of the high important news, and then go ahead and review two charts today, being the Euro Pound and the New Zealand USD. So what we currently have at the moment is the Daily FX website, and what we want to do at the Forex economic calendar is just click on the current time and change that to your local GMT time. That way you put all the announcement in your local date and time, and it makes it a lot easier to know when the announcements are going to occur. We've currently just filtered on the high importance news, but you can leave that on the medium and low importance news. All of those are relevant. It's just the high importance, and some of the medium important news just makes the market react a lot quicker than what we may be expecting. What's gone by is the Euro GDP number came out as expected, forecast 1.6 with actual 1.6. So what we would have seen is the euro sort of strengthened a little bit there as the numbers came out as expected. We've got some China consumer price numbers coming out today, so hopefully they meet expectation, and if they exceed or do better, they're going to see some strength in the Aussie dollar, and if it does the opposite, we're going to see some further weakness in the Aussie dollar. Upcoming news announcements. So for Australian Eastern States time, December the 10th on Thursday at 7 AM, we're going to see the New Zealand interest rate decision come out. It's currently forecast to drop from 2.75 last month to 2.5 this time round. So if that meets expectation, we should see some further weakness in the New Zealand dollar. However, if the RBNZ does not drop the interest rates, then you're going to see this New Zealand dollar strengthen quite significantly and quickly. So just keep that into consideration. And you will probably notice on the charts when we look at them today that the big players have already taken into consideration that the likelihood of the interest rate drop, and they're already started to sell off the market. Other announcements later on tomorrow is the Aussie unemployment rate and the unemployment change numbers. So those are expected to increase. So if they it does increase from 5.9 to 6, we're going to see some further downside on the Aussie, which we're currently seeing at the moment. So just keep a heads up for those numbers there, and hopefully they're in your favour for your direction. And another important newsment later on towards the end of the week, also on the late Thursday, is the pound interest rate decision. They're currently forecasting 0.5% from the previous 0.5%. So this to remain unchanged, and as a result, we have seen some of the pound weakness occur, and it's because that the economy is traveling smoothly. It's just not growing as quickly as expected, and the likelihood of increasing interest rates is not as positive as it used to be in the previous months. So that's why we're seeing some weakness on the pound. And if you're still looking that the pound is going to strengthen over time, and that's your fundamental direction, then any pullback on the pound is generally some good buying opportunities. So we're going to take a look at the first chart being the Euro Pound on the daily chart. So we just always like to start on the daily chart, and that way we can work our way down the time frames and just to see all the different levels and what's occurring. So what we're going to do first is we always like to drop in some support and resistance lines, and that's pretty simple. We just grab a horizontal tool and we just go drop in a couple lines. And what we're looking for is just roughly where it's bounced a few times, and that just gives us a rough idea of where the market could turn. And when we've got these lines in here, the ones above the top, what we call those is like a roof. So when the market comes up and hits these levels up here, that's like the roof of your house, and that's what we call them the resistance area or the ceiling. And then when they come back and they find some support, like on these levels here, then that we call that like the floor of your house, and it's finding some support. So that's how we determine support and resistance. Resistance is the ceiling of the roof, and support is the floor of the house. So that's just some terminology changes there. So looking at this here, we've seen it pull back, we've seen it hit this resistance area, sort of poke its head through, and we just want to sort of know, what will it do there? So what we're going to do is just grab the fib retracement tool. We just drop on the recent highs to the recent lows, and what we're looking for is a bit of a pullback, and we've seen it pull back here, and it's pulled back just past the 50% level. So we can see the 50% level, and that's where a resistance area was. It's trying to poke its head up through 61.8, but we could find that today and maybe over the next couple of days it starts to fall back lower, finding this resistance just being too strong. Looking down here, we have a oversold indicator on the stochastic indicator. It's over 80%, so that gives us another indicator that possibly we could be seeing a turn in the market. Let's drop down to the 4-hour chart. So now that we're on the 4-hour chart, we can just draw some indicators in. I've already got some indicators already drawn in here, and I've drawn those on the 1-hour chart. And what that was to show you is divergence. So at the moment we see a higher high in price, but a lower AO. And so what that means is when we see the price push higher again, but the AO gets lower, it's pushing higher with less strength or less power, less people pushing it higher. So if less people are paying more for it, then it's getting to the point where we could run out of steam. So with a few indicators there, we're all looking at a bit of a weakness. So if you've got any technical entries which gives you a selling opportunity here, then by all means you can jump on board. But don't just go ahead and sell it because I'm advising it here, because I'm not. It's just I'm just pointing out some indicators which are showing weakness in the market. But you need to take your own personal or professional advice, and then make your own decision based on your own fundamental rules and your own technical analysis. What we're going to do now is just jump across to the New Zealand USD chart. Here I've got my 2 announcements. I like to drop on my charts announcements coming up, and that's the New Zealand interest rate decision coming up on this Thursday, and then about a week later, the following Friday, there'll be the USD Fed will do their interest rate decision. So that just gives me a heads up of where I think the market would go. And the reason why I do that is all the big players are looking ahead. So if you wait for the actual announcement to occur, then you're going to be getting in the market at the wrong time after it's already moved. So let's just zoom down a little bit, and as we can see, the last couple of days the market's been weak on the New Zealand USD, which we have here on the daily chart, and that's just the big players taking the punt that the interest rates will drop in New Zealand. So that's why they've decided to go early. And if your rules tell you to get in and sell it, that's your technical entry, then jump in and get it. If they say don't get in, then don't get in. You don't just jump into a trade because there's a news announcement coming up. The fundamental news must meet a technical trade that you have set up, and when it gives you a technical entry, then you go ahead and take the trade. That's probably the safest point, because the news could go against you, and if you didn't have a technical entry, then you shouldn't take the trade. And so why did you take the trade? Let's drop down to the 4-hour chart, or we'll just go back to the 1 hour and we'll just drop in another fib retracement tool. So that's from the previous highs to the previous lows, and we can see that's pulled back to the 61.8% level. Let's look left and look for some support and resistance areas. As we can see some support and resistance areas around about here. You know, we can't be pedantic, it could be here, it could be here. We just sort of drop it in, and that meets the 61.8% retracement level. And we have another one down here. Just look left to see where it's bounced a few times, and that now becomes a support area, roughly where the first place it could find a bit of the support on this pullback. A couple of days ago, it did give you an oversold indicator on the stochastic, so that was another sign, as well as hitting these support and pullbacks on the Fibonacci retracements. There's a few indicators which told you it could be selling off. Dropping down to the 1 hour chart, the 4 hour chart I should say, we can see a bit of a pullback. Let's drop down to a 1 hour to see if we have any divergence. No, we don't. You know, it was close. We had the higher high. However, we didn't have the lower low on the AO. And we go from this point to this point, and you can actually see a slight increase. So based on a divergence indicator, that didn't occur. So you wouldn't have entered if you're looking for that, one of those rules there. So no divergence there, but we do meet a fib retracement of 61.8, and we do hit a previous resistance area. So looking at that, we could expect to see further downside in the markets, and if the US Fed the following week increase the interest rates, then we're going to see some more downward movement, and we could see the market come to here, maybe have a bit of a bounce higher, and then another further pullback lower. So what we're going to do is always just look at your risk versus reward. So if you did take the opportunity and you did look at maybe selling on a pullback, if that meets your criteria and that meets every rule that you have in play, then yeah, you could just look at selling it there, look at maybe a stop loss somewhere up here, trying to go past the previous highs, and then look for getting out maybe part of your portion at the previous lows and then following it down to the next lows down here. So that's just an example of where the market could go. So I hope you had a bit of fun and a bit of learning with this video today. It just goes to show that if you look ahead and look at the news coming up and just focus on a bit of pullbacks in the market and just going with your fundamental or technical direction, then you can make some good trade decisions. And all of these decisions should be made prior to the news events occurring or prior to any real technical entries occurring. That way you can know that if it confirms to enter, then you enter your trade, and then you already have your stop loss and your take profit level set. I wish everybody all the success in their trading. Take care, and this is Mark Sain from Sain Investment Solutions. Thank you. Bye-bye.